The tax burden is at a historic peacetime high. This undoubtedly matters, but it's often the types of taxes we have that makes the biggest difference to the economy. So let's talk about the three types of tax. First, direct taxes. These are taxes paid directly by an individual or organisation to the tax authorities, such as income tax, dividends tax, capital gains tax, property tax, and wealth tax. Usually these taxes are targeted at those with a greater ability to pay. They can be proportional, meaning that the rates of tax are the same for everyone, or they can be progressive, with higher earners paying both a higher rate of tax and a higher total amount. In rare cases, they can also be flat taxes, a poll tax, where a fixed sum of money is taxed from each individual within a certain area, is a good example. Direct taxes can be big earners for the government. They're also often used to redistribute wealth from the richest to the poorest. But they're criticised for blunting incentives. Income tax, for example, discourages people from working a greater number of hours. Company taxes discourage businesses from investing and expanding. Progressive taxes can also be very complicated. Creating different rates and exemptions for different groups encourages unproductive activity like tax avoidance, which also shrinks government revenue. Second, there are indirect taxes. These are taxes collected by an intermediary, such as a retailer, and then passed on to the tax authorities. The burden of these taxes often falls on the end consumer in the form of higher prices. Examples include excise taxes, tariffs, value-added tax, and sales taxes. They can be ad valorem, meaning a percentage of the price, or specific, a fixed amount per unit. Indirect taxes are very efficient for generating government revenue because they capture a large number of taxable transactions. They can also be used to discourage certain harmful behaviours like pollution. But they're also regressive. For example, consumption taxes have an outsized impact on the poorest because poor people necessarily spend a larger part of their incomes on consumption than the rich. Additionally, indirect taxes are hard for taxpayers to see, reducing the accountability of those making tax policy. And they're easily politicised. For example, if the government wishes to apply a stealth tax on some politically unpopular group, like smokers or drinkers, in order to raise revenue. Third and last, there are transfer taxes. These are taxes levied on the transfer of assets or property from one person or entity to another. Examples include stamp duties, inheritance taxes, and gift taxes, though economists and lawyers have struggled for many years to decide whether these taxes are direct, indirect, or something else entirely. To find out more about the nature, impact, and trade-offs of tax, read my new Introduction to Taxation on www.iea.org.uk.